Hello, good evening. Welcome to another ES Futures trading video. Today is Tuesday, August 29th. It is 8:47 p.m. Eastern Time in the US. All right, what I'm going to do, I'm going to replay this day, which is today. Okay. I'm going to replay today, and to do that, I'm going to, as usual, going to copy these references here because I wasn't in the market today, but I did my homework last night. And one of the remarkable things that I observed yesterday, right? After all what happened, we got this kind of like big blocks being accumulated. The curious thing, the peculiar thing that's happening in this market is some kind of big volume coming in the opening period in the market, not in the ES, but the whole market, and then just dries. I have observed that quite a few times the last past weeks. And from the homework, there was some kind of I couldn't avoid to observe that this month has come back inside previous month range. It's not below anymore, but the main thing in the monthly is it has not re-entered this range. The trend to the upside has ended. There could be some range forming here, some range trading, but didn't get back inside here. The weekly, you can see the trends to the downside. You got 1, 2, 3, 4, 5 weeks with an inside day the previous week. And the opening of the current week as an inside week. I mean, this is compressing here. You know, you have balance in this range, balance inside balance here, and the opening Monday inside this previous week range. There's trading range here. There was 3, 6, 9 days range in the daily. The way how the was being bought is quite mechanical, from the 100 twice. And this is what I left. My main thing yesterday was, this is curious, right? Just say the least. There's a range here, When you have balance, or when you have an inside bar, you usually go with the breakout or inside bar, preferably in the direction of the trend, right? The trend to the downside. Okay? But there is something here. There was something here. There was something very, very important that also caught my attention. No? We can see the daily twice has been bought from the 100. There are many things that can happen. Nobody knows what's going to happen in the market. Nobody knows. But this thing was what I got. Right? This 44.65 is a very, very relevant level here. This was this high coming from POC. Technically was repaired, but it just added more stuff. To me, it just added more stops here, and there's huge amount of volume here. I'm having a narrow range yesterday. I thought that maybe there could be some trading, but if the market comes back to this range here, to this area, there could be rejection from this level. Or if this level is taken, there can be a huge spike to the upside, short covering rally. because this is breakout of this inside this day and breakout of the 9-day, breakout of range, which is the more relevant. And for context, there's a lot of volume in this area. There's and the market was going from long liquidation to short covering to long liquidation. And the last thing I observed in the morning is we have back to back. See, you have very prominent POC, very questionable lows here before the opening. Okay, that's for context. Now, this is the current day. I mean, this is the overnight image. Settle, last is here, settle here. Where the market is at this moment, it's down here. Notice it's way down here. All this inventory, all the long inventory here is being rebalanced. Okay, market's opening inside previous day range, or it's going to open. It is just 8:30. All these longs are being liquidated from the overnight. All this long here are being the inventory is being rebalanced here. This low is very questionable here, very questionable. Is this a 45? Yeah, this is a 45. Traders were selling here. This is a 45 or selling at bad price or buying at bad price. I mean, the shorts here were forced to cover this day, but the buying that remains from this day is super weak as well as here. No, but who cares about that? 57, 857. Any news here? For today, what we have or we had is jolts at 10 a.m., consumer confidence at 10 a.m. as well. So the first period is going to be, could be, I don't know if it's going to be relevant, but B, which is 10, I think it's going to be very important. Still 914. This is 30 times the speed, okay? Price interval, but I'm going to leave it at 1 here. And now we're getting closer. I want to see how this opening was. 22, 22, 23, 24. I'm checking the time. 25 minutes. 26, 27. I'm going 5 times now. 27. Notice the time here. It's 5 times faster. Times 5. 28. I want to see. I'm curious to see what kind of opening this was. For what I have, let me show you something. For what I have here, now let's see some momentum here, and then just the market grinding its way to the upside. The histogram show there's no taper here. This level is very mechanical here. And not just mechanical level. Notice how this over here doesn't dry. I'm curious to see if the market open here and then rally, or open somewhere up here and then try to recheck, get back inside this range, and then dry. This could be a good opportunity to buy here. From here, I was very risky the long here now. Taper here. Also here there is no volume. I mean, there's a lot of volume. This is very mechanical. Okay, this is a 50, buying from the 50, twice from the 50. This level is not good. There's nice taper here, but this one doesn't have taper here, taper here. And the most important thing, I will show you something here later on. All right, 29th, 1 minute to the opening. I'm going to put this in 1. I want to see this real time. Notice how far the market has come back. It was down here, now it's up here. Oh, look at this. The market was opening and boom, rally. When the market has this kind of openings, this high is very close, very narrow range. Why I say narrow? Okay, why I say narrow? Well, this is not narrow, right? Why I say narrow is because things have to be seen in context. If I see this narrow, this range relative to this day, for example, is very narrow. Relative to this one is narrow range. Okay? Relative to what's happening in the market. That's why I say it's narrow. Remember, I have this level here. This is what I am observing here. If this level is rejected, this low is absolutely weak low. Okay, but we'll talk about this later. Let's keep playing this. The market has open. Really low volume here. How much is the VIX though? Let's see, how much is the VIX? Oh, 14. No way. 14. Well, VIX is a 14 again. No freaking way. Oh, okay. Something else before we go. The bond market. Yesterday, when I did my homework, something that I've noticed is the market had a gap when I was doing my homework. The overnight was having a gap, but let me show you how it was. It was like this. Now, already gap high. I don't know what happened here. I guess China is at I don't know, it's up 6 p.m. it was reported, but China is cutting rates. We have a significant gap here. The 30 is inside, but the 10 is way up high, way above the previous day range. So the shorts here can be squeezed. The risk of being squeezed. The dollar was like that. Gold. It was something like this. Huh? This is the most obvious thing. Now let's keep playing. Very slow opening though. How much time? 31 is only 1 minute. Opening inside previous day range, advertised chop. The closer to the center, the higher the odds that there is going to be rotation in the market. Notice the high. Notice the current high of this day. This level is weak. Okay? This level is weak. I don't know why I put it weak, but it is weak. That's why I have these white lines. Oh no, it's high volume already. Notice where the selling is coming from. Exactly from overnight POC. It was made in that way many times before. Here, for example, coming from very prominent overnight POC this day. The overnight, this is NVIDIA. This is a white. This is a white. Let's see if I can. Let's see. Okay, exactly from this day. This high is not good. It has, and on top of that it's very very thin here. If the market takes this, takes. There's nothing here holding the market. The low is the low is bad as well. It's very bad. This high is no good. This low is no good here. Very, very, very quiet opening. I have to say that. Very quiet opening. I wanted to do it in real time to see. Okay. Inventory is long. This is a counter action. Was some of the inventory was rebalanced before the opening. The market tried to do another counter action, didn't do nothing so far. This high is questionable. If the market breaks from here, it could come back to this level. This kind of highs limit the action of the market. There's something else that I want to point out here. Something that I have noticed in the market. I hope you have noticed this also. The way how the market is trading, very mechanical way. This is a typical action between short-term traders and just short-term traders, but bigger, okay? Bigger short-term traders, traders with capital, versus short-term versus retail doesn't have a staying power. A lot of the activity that I was seeing or watching is the market going from long liquidation. Small traders get in the market too short, and then somebody comes and forces shorts to cover. And the opposite way as well. The market gets too long, and bigger traders just come and force the liquidation because there's inventory there. That's one type. When there are no bigger participants, when there is no investor, or there's always something, right? But when one dominant force, in this case, that prevails is short time frame traders, the action is between them. Now this high has been repaired. How much time? 4 minutes into the opening. Nothing remarkable in volume. Volume was about the same as yesterday. Talking about this, not too much. I'm going to speed this up. Oh, look at that. I didn't speed it up. When we talk about how high are the odds of rotation the closer the market opens to the center of the previous day range, which kind of like could be the case today, there is one exception to that. When the market shows conviction in one direction and fingerprints its way out of the previous day range, either to the upside or to the downside. If it does this to the downside, it's going to be generally a weak day, okay, a weak market. And if it does the opposite, if it breaks to the upside or the previous day range, that can potentially signal a strong market in the short term. Remember the context. What we have the previous day, what we have here, there's absolutely nothing here. In this day here, right, this single prints here, there's very thin market here. Though there is a lot of volume here, a lot of stops here, and there's a bunch of shorts here. And my particular focus also is the tremendous amount of blocks here in this area. All of these arrows here are blocks. Selling, buying, no. If the market comes back to this area and goes through this, it means that these were buying. What I marked here, this color, is this amount of volume of blocks happening after the closing. Just after regular trading hours, just before the closer, just before 5. There's a lot of volume here, And this day, the 23rd, what day is that? Friday? No, it was Wednesday. Okay, there's a lot of volume, thousands of, not the kind of volume that you have here. You have 2,000 contracts here being traded, but thousands of contracts in one transaction. Okay, that's the thing. One transaction have thousands of contracts. Who does that? Okay, who can do that? Certainly, I can. I don't think you can. You know, can you buy 1,000 contracts or 2,000 contracts at once or sell at once? It's quite risky, right? But if you have the power, or if you have the staying power, you can do that. And happening at the closing, in the market that's going to the upside, because the market was going to the upside, it just holds the market. You know, more likely, this volume is way up here, and all of the longs from here are being forced to liquidate here at the closing, because they cannot take trades overnight. They need to close, and there is some absorption here. Or the other thing can be, this can be that happened here. There was a short squeeze here, and the market never came back. Finally, you know, when you have a short, so what do you do to cover your shorts? You sell, right? You're selling mass here at the close. Or this, you know, this somebody buying here. All that things buying here. No, those are just, nobody knows for sure what's that. Just, we will know just after the fact. Okay, so don't worry about that. Pay attention what the market is doing. We have excess here, nice taper, volume right at the last, very mechanical again. It's still inside previous day range. 9 minutes has passed by. Nothing here is telegraphing something like it already like happened today. I was praying, please don't come today, don't take this level yet. Wait for me until I come back to the market. Okay. That's not, I have to say that, but please, I don't want to, but I was really disappointed today when I checked, I couldn't avoid to check the charts. Oh gosh, the market was breaking out this range. I was in this area. Okay. Okay, today is the day. And it happened. But look how long it takes for the market, for this trade to develop of 1, 2, 3, 4, 5, 6, 7, 8 days. Almost 2 weeks to develop. Right? 2 weeks. It doesn't happen in the intraday. In the meantime, there was one try here. Twice here, and there was another day. And this looks just like short covering, right? Short covering here, long liquidation here, and short covering here again. What's happening with to value? Do you remember value yesterday? Okay, I not consider this value, but this value was overlapping to lower, but yesterday value was higher. Okay, it didn't even get close. This was very important yesterday. It didn't get close. When the market didn't get close, or inside or overlapping to higher value, there could have been some short covering at the closing, which happened. Now, this is very close to have a breakout here to the upside. Let's check the volume here. Look at that volume, man. You want to see, what you want to do is, you want to see value. If there is direction and move, okay, can you see this pink here? That's volume. Volume is coming up here. Selling, buying, who knows? If the market got some reds and greens, it can come. You can say selling because the market, after that the market comes down. But what can happen? Another thing that can happen is, there's some buying forcing the market to the upside, and then that buying just disappear. There's some pullback. Okay? You can buy the market and then just stop buying, and the market will fall back because of its own weight, not because somebody's selling. consider that alternative as well. Nobody knows. Now we have a breakout of the previous day range. Upside continuation will take this high, overnight high out, which put the market in. There's a significant amount of supply here, but this one is even more. Notice where it was sold from. Okay, you got a trade here. If the market comes back inside here, well, first, where value is? Value is higher, right? You want to short the market? I wouldn't short the market because value is higher. That's one. Okay. Two, there's a breakout to the upside here. You can have a long here. What is your stop? Your stop is if the market comes back inside previous day range. Comes back, falls below this, maybe give it a couple ticks, and if it does, that's the way how you know the market is telling you, you know what, you are wrong. If the market, rather than falling back inside this range, takes this level out, that's continuation. The market is having continuation to the upside. So far, it didn't come back. Okay, it just dries here. When the market falls back 1 or 2 ticks close to this level, it just dries. Volume is building above this level. Very low though, very low. There's no 5,000, 6,000, 7,000 here. No, okay, now we're talking. A strong market doesn't do this. The market just maybe check it once and then it keeps going higher. It's very low. This is real time. This is real time. I want to see this, how the action happen in real time. I can like have a very good idea when I played 5 times also, but I think it's worth to have it in real time. Notice where the buying is coming. Okay, it came back to this day high, this questionable high, like 2, 3, 4 times, exactly to this level. Okay, that's a sign of short time frame traders. Okay, continuation, we'll see this market taking this high out. Your stop is down here. If the market comes back inside, your stop is the opposite. Just a couple ticks above. But why will you short? Okay. Remember, my mistake many times is focus. Give too much attention to something that the market is not doing, what the market can do. Let's focus or try to identify what the market is doing, rather than what will do or what can do. Okay, this has been taken. That's upside continuation. You don't want to see these hundreds here. If you're going to the downside, you have a short long time. This is bad for a short. This is not drying here. Volume is not drying. You don't have this kind of like high, lower, 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 lower. It's very uniform. Granted, this is low, right? This high has been taken. The stop is still here. Stop is still here over a couple ticks. Maybe you can move your stop 1 tick. No, I still will leave it here below. Because, that would be a mechanical way of trading, okay? As long as the market doesn't get back inside, you're still safe here. Maybe just move. Okay, there's supply here. There's a lot of volume in this area. Yeah, okay, just feeding on that volume, and those stops here. And this could be the potential destination of this in the market. And right now, okay, you missed the trade here. Okay, you missed the trade. Okay, this market is going to the upside. There's a breakout here. What's next? Right? I told you don't don't guess, don't try to guess what's happening or what will happen. Be present on what is happening. Monitoring for continuation is very important. There's nothing here. It's nothing here. The market shouldn't have any problem going through this level. And there's a big amount of stops in this area. These stops from here will move just higher. Okay, and 10 a.m. I'm going to go 5 times faster now. 10 a.m. is jobs and consumer sentiment. Remember that. What's happening here? But notice how much trade happens around this level. This is 5 times faster. If this was real time, that would be a really good market, man. Really strong market. But notice how many times this market is trading back and forth, the overnight high. I mean, a strong market doesn't do that. Maybe check it once and then boom, let's go. Let's keep going higher or lower. No, but this is not a good sign. Not a good omen for the longs here. Another time, selling coming from overnight high. Buying coming from overnight high. Did you notice? Did you see where the buying is started here? Now there's some taper here. Okay, there's some taper. Okay, I'm going to watch this. If I have my long here in this area, okay, there could be a good odds here. If this market comes back inside here or too close to this, it can come to the downside. I'm not going to let the market stop me out. Okay, I don't want it to come in back inside this range. That would be bad. You need to see, we need to see things in context here. This is, I'm trying to educate, to bring some education here. This area here, okay, that was an out here. Did you see how far this dropped? Or did you see where the market is being bought from? Exactly from this level. Okay, this is information. But sometimes, and that's why I say, just keep your stops here, below, because coming back inside here is a violation. Okay, it just you got a trade, you got a structure. The market cannot come back inside here. That's the thing. As soon as the market comes back inside here, that's an out. It didn't. It was bought one tick from this high, or call it a high. Very mechanical way to buying. Very mechanical. This is the release of the news. This level has been taken. The volume of this level has been taken. If there were stops here, I call it high volume area. Probably there were 10,000 here. In the same way how we have oh, look at this volume. Come on, really low here. 500? No way. This is short covering. This is. Can you see? This is real time. The way how this has moved is short cover. All these shorts here, all this volume here, are being forced to cover here. I'm going to remove this level now. And there's another very important level here. This is even more powerful than the one here, than the one was here, because it has 3, 1, 2, 3, 4, 5. If this level is taken, come on, this is not going to hold. This is too thin. And look at where it was sold. Remember all of this. This is why I wanted to. Why I wanted to watch the replay, because all of this rally is coming exactly from this high. Okay. Look at that. Where it's being sold from. I wish I knew you when I was young. Wow, I don't like this at all. Michael come back and retest. Come out to retest this. Whenever I see this kind of prints here, I know something happened here, some news, and then just boom. You know, if the market leaves this kind of tail, it's very, very likely it has good also market come back to check this one stuff. I would rather prefer the market come back here, come back here, and then dries here. It just dries. The lower it goes, the lower volume it attracts, and then after that it can go higher. But that volume, the way how you have it there, that's I don't like. And this news event, I'm gonna fight back to 5 times again. Very, very mechanical. Market is struggling here. But remember, the exception to the rotational day is when the market single prints its way out. Okay, that's what it did. It did get out of this range. How it did it is questionable. It's kind of volume, all that stuff. But don't focus too much. That's just one piece of information. Now this level has been taken out again a second time. Second time has been taken. Now I'm very focused on this one. Now continuation will take this level out, and I expect maybe a spike from this level. Okay, there are a bunch of stops here in this area. Right where the market is at right now, there's a bunch of stops here and here. But the most important thing to me is this area here. Continuation. Right? 2 periods to the upside, very long. Okay. Now, I want you to remember something here. This is constantly working. We have to be constantly working here. We have this 9-day range, and the market, what is this range here, with this high? Right there, the market is really close. This could be a breakout of this range, which is this one here. This inside bar, you have an inside bar here, the weekly here. This is an inside bar, and then potentially pick from this high as well. The next one, the upside continuation in the weekly time frame, we'll see this. But there's weekly and daily references, right at where the market is now. Okay. So this level here is relevant because it's weekly and daily time frame references. And in the intraday, it has a lot of stops here. I want to see how. I know now that level was taken, but I want to know how that level has been taken. Okay, there's a pullback here. And sometimes, let's see how far this pull. I mean, a good pullback. I mean, it won't come back inside A, for example. It won't come back inside A. Or to half back, or the market won't be bought from half back. Let's see. And if you have the potential, the ability to replay a market, do it. I would strongly recommend you to do replays. Okay. It came back. It didn't come back to half back. Now this level has been taken. Okay. Now this is a weekly, very weekly, daily, week reference. Because it came from half back. I mean, overnight POC. Uh-oh. So far you're having continuation. This could be another potential entry here. Okay, if the market comes back inside, boom, that's an out. One of the things that we need to focus is location. Okay, now I know where the market is going to the upside. Okay, now where can I find location? Where I want to go? I want to join a movement. Okay, if I join here, what the market will need to do so I know I am wrong. I kind of too far, right? Too far from here. But here is really close to this high. You know, when the market took this high out, right there. Okay, I won't let the market come back below this level because that will be a sign of weakness. And try to go long. Remember, context is everything. This trade may not work in another context. Remember what we have here is the weekly, lot of volume here, crazy buying after Nvidia, weak, poor exponentially poor reference here, accumulation of volume here. Those kind of things we not repeat. They don't repeat. The market don't repeat itself, never. There is a lot of volume here. If this buying happened here during this day when the shorts were forced to liquidate and there was absorption in this overnight, they are here. Okay, so the trade for of these blocks, it's just starting to work. Okay, just starting to work. But notice how long it takes. If this trade took how many days? 1, 2, 3, 4, 1, 2, 3, 4 days to develop. Okay, I don't expect to be completed in one day or one session. It may take a couple sessions to be completed, 2 or 3. Remember, we have a lot of important things to it. We have PCE on Thursday. We have non-farm payrolls on Friday. We have end of the month on Thursday. We have Friday, end of the week. There's a lot of things going on. And the contract is starting to, this contract is being, there's a rollover that is starting now. How you check the rollover is, I'll show you. I think that's important so you know as well. This is the official website of CME, of the ES. You got the current contract. What's the volume the current has? 1.2. Look at what the December contract has, 4,000, okay? This will start to decrease and this will start to increase. This is another entry here. When the market left a non-excess high here, the market took that high out. That's also an entry here. What's the location? Okay, you couldn't enter here. You couldn't enter the market here. You could enter here. If the market comes back below B, that's an out. Now, this market is freaking long now. So the market is super long. Just notice how single prints. This is a very emotional market. It already has 2 distributions here. Emotional. What is an emotional market? You know, this is a short squeeze. Now, all the shorts from this day that did not cover here or were still adding to the average to their positions now are being forced out. Now let's check the volume. What happened in volume? Continuation. This is too far back to be a reference. I just pulled it out to show how this day was sold exactly from POC, meaning all that happened here is very mechanical. You know who is doing that. All right, the 50. Where is the 50? Where is the 50? Let me check that out. And why I check the 50? Because that's a reference. That's a mechanical reference. What kind of trade is? 44.90. Yeah, right there. That's a 50. And what do we have right there? The 4,500 here. Now has come back inside this range. There's some selling here. And sometimes this, when the market get too long, the market's too long now. It's too long here. There could be some freaky pullbacks here that just scare the hell out of trades. But really low volume, my God, really low volume, 2,000. Even I put these two together, that's not going to be that much. And putting these two together is only 5,000. That's nothing here. Nothing going on. Nothing else, mother. I'm going to pause this and show you something. Notice how the blocks here, there's no big blocks, there's zero trades above 150. There's something here that happened on 44.76. Happened on C, right? Is this C? Yeah, this is C. It happened 44.76 right here. This one happened in C. $3,300. How much you have a total here? 6,000. Let's see. No. I don't know if it happened here. That's a good pullback there. Look at where the market is pulling back to. Where the market is being bought, it's being bought from. Let me remove this one. So you can see, notice where this market is being bought from. This high. Yeah, it was bought from this high first. Now it's being bought from this one. Now this is technical trading here. This is computer trading. They have those traders have those references in their charts, on their charts. Nice. Notice how it was bought exactly. Kind of like, man, this is the right to the tick. If you use 2 ticks chart, this is going to be right to the tick. This level here, the 4,500. The trade could be coming to an end. Still 3,000. 3,000 is a big fight here. Okay, 3,000, 39. 4,000, 42. Oh, I see. 42. 43, 38, 35, 36, 38, 15. Volume being accumulated here. 35, 32, 28, 3,000. Volume is being accumulated. Inside B. That's not a good sign, actually. Okay, now let's see what. This is the second time the market is being pulled. Now, what is the message here? Okay, this market is already incredibly long here. The market is incredibly long. And the pullback, the market has come back. It was bought from this yesterday's high. And now this is the second time the market is coming back to B. If the market rallies from this level, God also the market is going to come back to there is nothing good to come out of that. I would rather prefer the market coming back inside here, but that will be too much now. Okay, nothing good can come out of this. Right? That's what I'm trying to say. But because who buys there? But the main thing, okay, this could be something not for today. Not for today. Okay, it doesn't have to be repaired the same day, but that's just information to carry over. That's just one piece of information here. Notice this volume here. Very mechanical buying there. I'm going to carry this level for the future. The 4468. 68. I mean, it's not random that happened. It was a reference. This was the reference before. Now is this one. I know this is this. The market is paying attention to this level. Okay, the paying attention. 28. This could be the end of the trade actually for the day here. These ones are out now. Oh, they can still be in the market, can they? Yeah, I think so. They're just averaging positions here. Another, if you see a spike, like a sudden movement, like really fast to the upside, that would be the end. That would be the end. Which is, when this is when the shorts finally throw the towel. The selling coming from hardback, no good. Buying coming from here, no good. Now this movement. Now you're going long here now, right? You didn't get long when the market took this high. You didn't get long when the market took this high. You didn't get long when the market took this high, which is location. The last thing, this level also, when the market does this high. And what is location? Always location. As soon as the market comes back below this level, that's an out. And notice, you need to understand, we need to understand that we are going to go long here. It's way behind. We are in the later stages of the trade. Which was the trade? The trade was taking these highs out, this level out, or this level out. That was the trade. Okay, this could be, the market could be entering quite soon actually, another later stage of the trade. Late majority, maybe laggards. This is not a reference anymore. That has been repaired. The overnight that high from this day remains there. Okay, I'm going to go faster now. I'm going to go 30 times. 30 times faster now. Thirty times faster. Remove this. Oops. What the heck happened here? All right. The next reference on the upper side. Now this movement has weakened, but there is nothing here, right? Market shouldn't have any kind of inconvenience going through the single prints. And the 4500 is up here. Another distribution. Something serious to the upside. Well, it already has 3 distributions. 1, 2, 3. But it will build value above here. Oh boy, this is just too much now. It's just too much now. You want to go long here. Okay. The first time usually is sold at this level because this is a 50. What the market is doing that? It's doing nothing. Just keeps going higher. These shorts are out now. Okay, this market is never going to stop rallying. Shorts while being squeezed here. Quite a day, huh? Quite a day. What time is it? It's 12. This is, I'll say this is not a reference. This is not a reference anymore. This trade is still, it's just starting to work here. This wicker is not a reference anymore. This one is not. This has been, all this has been repaired. Now notice how close the market is to this, to the 4,500. Let's check what POC is. Okay. That POC, there is a selling from that reference. Oh, look at that! Look where the market is, where this market is being bought from, right from the 50. Come on, don't tell me you're going to hold. Don't tell me you're going to buy from the 50. Come on. This is, I mean, I'm not looking to go short here. I being shorting a trending market is the worst idea that can happen to you. Never short a trending market. But traders keep doing that, right? Because the market has gone too high. The market it's time for the market to pull to fall back or whatever happens. And that is something that actually can fuel these markets, these rallies. This inventory is super low now. This is a nice trending day here. Another trade, as I said, was here, taking this long. You got one. It never came back inside this range. It never came back inside the 9-day range. After that, it shows some sign of weakness. It started to show some weakness now. Another distribution here. 1, 2, 3, 4, 5 distribution. Crazy emotional day. Volume. What's happening in volume? Really higher volume relative to previous day. How much more? Around 20%. But, and this is the thing that I want to show you early. Okay. The market has closed this distribution. But notice how low this volume was. Very low. Okay, let me pause this. How low was yesterday? It is true that today we have 50 or 20% higher than yesterday, but look at where this volume is. Come on. You know, this is the highest of the last 10 days. And where this volume is? It's freaking lower. I mean, so far I am watching a magnificent rally, a very emotional rally. And when I look at the volume, look at this. This movement has nothing on it. This is just short covering here. Short squeeze. That's what the volume is telling me. You know, that's what I can get from that piece of information. Now, again, where the buying is coming from. $50, this very mechanical buying here. Oh. When I see weakness in the movement, you know, how mechanical the movement, it doesn't mean I'm going to go short. It's just an information. It's just information. If I'm not in, you have not get this rally from this breakout when the market took this high out, the odds were this one was what could have been taken as well. You know, and now I don't pay attention to value now. You know, we don't do value in trading days. Now, another thing that happens quite often is when you have trending days, then usually it gives you a pullback, but late in the sessions, 2 p.m. You know, which allows the rebalancing of the inventory. We have seen that this inventory is super long now. It's a trending day, and the rebalancing can happen at in the late hours, and that rebalancing often mislead. Often traders are misled by that rebalancing. They have the tendency to think, okay, now finally the market is going to break. I have been short in the market all day long, and finally now I have you. I have the market. When they see the pullback, it is 130 here. Let's go. I'm going to go to 30 times because I guess this is. Oh, look at these highs, man. 1, 2, 3, 4. Remember, traders do what works until it doesn't work anymore. During the last past weeks, there was a lot of times when you have seen this kind of highs, or this kind of lows, and you have a significant break, and the resolution, this was usually in the opposite direction. It happened here, for example. It happened here as well, and there is a trend to do that. This is not good. Being short here is same as suicidal. And what this level is, the 4,500. I have this one marked as a 4-week range high from the weekly. Let's check what that is. Having from the weekly, have it here. I was talking about this, but the market has came back to this just multiple times back and forth. This is not a reference anymore. Well, just for context. This is not a reference anymore. So I'm not going to pay too much attention to this. Okay. That spike. Okay, that spike is. Traders finally, finally thrown the towel here, and that kind of spike is usually where or used by traders to close their positions. Okay, this is it. The market can keep going higher now, but that's it. That's the end. It has took these highs out, and that can be mistaken. Also, this is another mistake traders do. So they see the spike and okay, now finally I'm going to go long. Look at what the market does. Come on. Remember what I was talking about the rebalancing of inventory? This 2 p.m. This can't be oh, come on. Again, where the market been bought from this level? This high. Weekly high. Okay? This is support now. POC is being bought. Let's see if the POC moves higher. If the market keeps going higher and it's being pulled back, that's the POC. That could be a mini 45. This market getting low. And again, these shorts were removed with this spike. Now again selling they again selling for 4,500. Come on, don't tell me. And this is the misleading. Okay, this is the market. This is how price mislead traders here. You see the long liquidation here. All these longs here were liquidated here quite fast. You got the spike, which is used by traders to close. Most of the time they close the position here because that's how right? That's shorts finally throwing the towel. Shorts from where? And from this day and from this day. Okay, context. Okay, this is not always happen like that. Tomorrow is not going to be the same day. All the shorts that were being activated here were very active. Okay, which I kind of tend to believe it was short rather than buying because the volume is extremely low relative to the magnitude of this movement. This is a huge movement to the upside, and look at the volume. relative to to the magnitude of the rally, the volume is very low. This is all business. I'm not saying the market cannot go higher. Eh? I'm not saying that. I'm trying to characterize, to describe the market here. It's just more relevant than this level is this halfback here. Again, this is the second time the market is being sold from on the 4,500. This movement here mislead the trades. Okay, this market is going to now I have finally I have kept adding to my shorts, adding to my shorts. Now I'm going to make a lot of money. And this is just rebalancing of long inventory. And the laggards, now the traders that have seen this market going higher and higher and higher and higher and higher, I couldn't get in here, or in here, even in here. Now finally, right? Finally, I'm going to go long now. I will go long on K halfback. Finally got a long here. Those are the laggards. No? The next thing that happens, it just came back below, takes this halfback out, and now selling again from the 4,500 to the tick. You know, this is just too late in the session to do anything here. Mechanical sell now, those have been corrected. I'll carry this level as a weak. This pullback here, the first pullback here. I mean, it was made multiple times. Actually, not that much. I guess these three together, okay? These three together, this could be firecracker effect here, but because it was bought from the 50, basically. Now an outside bar. Do we have a spike? A late spike? No freaking man. I'm going to take this one. Are you going to take this high? Gosh, you did. Upside continue. Another distribution here. Very crazy. Distribution, very mechanical buying here. Right from the closing of the distribution. Closing this distribution, notice how risky the trade is here. Now, closing this, the markets traders just keep buying this. But closing this distribution actually targets the opposite side, targets this low. Now, it wasn't bought from this high, but it actually already closed the distribution. Now, being long here is crazy risky. I'm not saying the market cannot go higher, but the risk has increased significantly. Oh, look at this. There's it's a very prominent, not a prominent POC up here, but it's from this day. It's too far back to be of relevance. 55 minutes. Market has excess, just about this high. No, you are not going to tell me you're coming from. Are you coming from this halfback? My God. Gosh, look at this. The market just came back. Just put a line here. And look what this halfback is there. This has an excess, but this is not. This is a weak. I'm going to carve this as a weak high. Alright, market has closed. Oh, now the market has closed. I want to show something else here. This is quite peculiar thing as well. Whoops. I'm going to close this thing. All right. Watch out. Just wait. Interesting. What happened after the close? Look at that tremendous amount of print. This is what I'm talking when I say this tremendous amount of absorption that happened after the close or at the close. It closed here. Right? This is the first period of the overnight session. This could be the long off. Here, it's not usual you see this kind of volume. You know, this could be the shorts from way down here. You know, from here. Finally, you know, I'm going to buy the market and buy closing the position. Right? There could be some absorption here, or it could be the longs from here closing the position. There can be some absorption here. Any of those. But notice how big this volume. It's not a volume. This is not the volume that you have here, right? This is the volume relative. I mean, this is the amount of trades that happen above 50, okay, 50 contracts. On the this is a comparators. On the left side, I have trades above 50, blocks of trades above 50. These blocks of trades are above 150 here, 50 here. Let me show you how I do this. I'm going to do, what is this comparator? 150. Let's put this 1050. Okay. Okay. Can you see? Over here, there are at least 2 trades. Okay, there are above 100, above 2000. Here is a lot. Let's do this. Let's round this up to 2000. 2000. And notice what happens here. Okay, here or here. Notice how a bunch of this one have disappeared. No? 2000. Okay. 2 trades, 2 purchases above at least for 2000. I want to see if there's one purchase or sell. Or I don't know what is. Okay, not 4000. No. Sometimes there is amounts like that. Not 4000. Neither. 3000. No. 2000. Yeah. Okay, you got 1000 here. Well, interesting. That's quite interesting here. Well, now we're doing the right side. Quite a bit, huh? Quite a bit. Quite a bit here. Remove URLs. Remove URLs. URLs settings. Okay. That's something I wanted. This is what I'm showing. Now, moving forward, the market has already gapped to the upside. We know that the market is not that strong because of the volume. The bonds, what happened with bonds? Okay, this is a nice short covering rally here. The 10. Let's check the daily. Too much noise there. Crude oil, nice range. I mean, nice trending on dollar. Gold is record. Look at this. This is good. This is not. This is good. Notice where this market is. This is. I mean, there's a new contract starting here on the bond market. Quite peculiar. The market closed at the lows. Pretty much. I think this is the first day of the new on the futures here. Okay, what do we have here? More range. No, now I could say I could say maybe we may have a three week range here. This is a breakout of this inside bar. Go with breakout of the bar. Now it can't break this 2 week range. You have 2 week range. You can't break this range. I think this could be critical here as well. 44. What is the high here? 45,775. Where is that? 45,7 is this high here. Okay, what is this? This is a weekly high. I'm going to name this as, I'm going to remove this. I'm going to name this as 2 week range high. Upside continuation, we see the market respecting this level. I don't want to see the market coming below this, because if that happens, what may happen is if this market that would be a look above and failure. Look above, falling back inside this range targets this opposite side. First have to deal with the inside bar. Oh, come on. And we can see the market's right there, has just taken that level. That level has been taken. Okay, that's what I got from the monthly. I mean, from the bigger time frame. This kind of analysis is kind of like a shake up you, can shake your brain. Notice the tremendous amount of excess this bar has. Would you, if the market closes this high, that would be unbelievable. We still have how many days? 2 more days to go, but this would be unbelievable. The market come, because it will leave an extraordinary selling tail here, and that that's not good. And what are also that happening also? I got this range here. Now the whole range is in play again. The whole range here. This could be a breakout and failure here, because there's a lot of things coming on. Now we have a lot of things coming in the pipeline. Tomorrow we have GDP at 8:30. On Thursday we have CPE. On Friday we have non-farm payrolls. Very important events that can move the market. I don't like these lows. I don't like these lows. I don't like these lows here. This is a range. This was the 9-day range, 3, 6, 9, 10 range, or something like that. That has ended. That is no more. I will still keep this range. I will still keep this shadow here to see if the market comes back inside here. I'm not saying that happened. Anything can happen here. Right now, the trend to the downside has ended, and V markets are rare. Remember, V markets like happen here are rare. It doesn't happen that we're coming down and then going higher. It doesn't happen often. Usually, markets go from trend to range to trend to range. Okay. And I guess the most important chart is the weekly time frame. There's a trending now. The market is one time frame higher. There's a trend to the upside in the daily time frame. Very significant rally. It could target this high here, especially because the market is very short now. All of these shorts have been removed now. All the longs that we have here are out when the market took this, made this break. Now, the market is very short. We know that this movement didn't have volume, At the movement that is starting now, it also don't have volume. It have even lower volume than before. Very low. Let's do this daily. How can I do this? Today, look at it. Oh my God! Look at where this volume is. Very low volume here. Very low volume. Which is a sign that this movement is all business. Mostly. Okay. Charts. I'm going to look a little bit deeper. If I check my market profile charts, this is a very emotional day. All of these shorts have been removed. Now these shorts are, these longs are very questionable as well. 1, 2, 3 distributions. The 4,400 is right there. Again, this level has been, as the market has paid a lot of attention to this level, to the 4,500. The next thing that one see, that I can see here, is if this has upside continuation. Taking this level out, but taking this one out. Upside continuation will. First thing, one of the most important things I believe is the gap we have here on the upper side. This is a weekly high, 44.75. Oh, it's this one. What the heck? 44.68. 45.07, 45.44. Oh yeah, this is big. 45.44. I'm paying special attention to the weekly charts here. The same level, the same volume the market has had here, which has been corrected, very mechanical selling here, very mechanical selling here, can happen here as well. But this is accumulation. This is higher volume areas here, higher volume areas here, not weak references, just higher volume areas. And also the higher the market was made in the overnight session. Okay, that's what catches my attention again. Okay, it would be just unbelievable, to say the least. Okay, because what will happen if the market took those highs? It would be, this monthly chart will be just insane, just insane. But there's a lot of short-term trading here. I'll try to remain as neutral as possible, and just wait for your opportunity. It will come. Okay, it will come. The market will give us opportunity. Don't try to force the market. Okay, all right. I wish this is of help. If you have any questions, just come send me a message on Twitter or on YouTube as well. Any of those can work. Or on Twitch as well. The chat is open there. I have not posted the last couple of days on Twitter because I didn't see anything. I wasn't here actually. I wish you good luck. I wish you guys good luck for the rest of the week. Stay safe. Bye bye.